All right, guys, what's going on? It's your boy Henry here. Welcome back for another market update. So today we're going to be going over SPY, QQQ, Bitcoin, and VIX, just as we do every single day. And we're going to be going along. We're going to be going over how our projection is going along, and what we said was likely, which is SPY is going to be testing here, and I do expect us to get resistance here, and we start reversing off of here, or I do expect us to get resistance. If we break here on SPY and we close above it, then I expect us to push up to here on QQQ, which is still a decent amount away. So, uh, I mean, that's just what's on the table, and that's just how it is. But also keep in mind, this is a short squeeze rally, and whenever people get stop getting squeezed, we talk about this the other day on the channel. I introduced this little thought to the channel, which is like all of these rallies, like the up movements here is it's the buying pressure is being caused by shorts getting squeezed, just like these down moves are caused by longs getting squeezed. Like this whole bear market is just people losing all their money. And since dealers do make the most money in these in markets like such as these, like if you think we're making money, no, the dealers are making crazy money off of this. They're just continuously squeezing people. People are going short squeezed. All right, and that's just something that's been happening for quite some time. We said that at the bottom, it doesn't make sense for the options, the $3 trillion dollars in options that were expiring. It doesn't make sense for everything to go like short from short. It just didn't make sense. All right, so I said it makes sense for them to go long because they got all of this money here, and now they're going to make all that money there, and they're going to double the money they made here, maybe even triple, maybe quadruple, maybe 10x the money. Like, look at this monster rally. Like, just imagine, they're crazy. These are crazy gains here. But yeah, and we do have a similar situation coming up to that monthly OPEX that we talked about. We have something coming up. All right, that was the quarterly OPEX. We don't have the quarterly OPEX, but we do have a monthly OPEX. And I was watching a video the other day, and I'm gonna give credit to the channel. I think it's called the Trading Fraternity. He's a guy. He uses a camera, but he doesn't show his face. It's weird, but it's really, I don't know, it's entertaining to watch. It's pretty cool. It's kind of what I do with the charts. I talk, and then you guys are entertained by the charts. Keeps your attention. He does it with his hands. And but yeah, he mentioned that 1/3 of the money in options on SPY and QQQ SPY and SPX expires on August 19th, which is pretty flippin' crazy. Like, let's just go over here on there. Okay, so let's look at that. Let's just bring up, does SPX come up here? No, it does not. SPY, okay. The way we still have SPY, and this just looks sick nasty. So we do have a candlestick formation, by the way, that we're gonna go over. But I'm gonna do it on TradingView. I just want to show you guys once we got expiring, and I honestly, I would believe him. This is it does look like this is going to be a pretty jam-packed options expiration. But keep in mind, a lot of people did probably move over everything to September, like such as we do. All right, like we just rolled everything, our whole short position over to September. That's really what's happened. And I just let my August ones, they didn't die, but I'm just gonna call them dead. It's whatever. But the September ones are fine. They're holding their value, and yeah, as long as you got some good buys in that, you're solid. But again, like we were expecting us to, and look on the weekly, we're starting to curl. That's pretty cool. Starting to curl on all of these on the weekly time frame. All right, and look what happened when you started to curl. Over here, you formed this bearish divergence, and then you fell. So maybe that is on the table. But I do think it's going to be rather quick, and I do think we are going to start falling on August 19 or the following week. The same way that I said on this date, June 17, $3 trillion. There's $2 to $3 trillion in options on the indices, or actually just across the market, I believe it is, not on the indices. It was expiring, and it doesn't make sense. Like, we're already down here, oscillators are down here. I think your weekly oscillators, like I was also waiting when we were up here, I was waiting for the daily oscillators to come down, match the weekly oscillators, and look, we finished that. Like, there were so many signals telling you to buy here. You finished your bullish divergence. The daily time frame finally matched your weekly time frame. You had your bullish divergence on the daily, so your ultimate buy was right here. All right, that was the ultimate buy time. Was it right here? Yeah, I guess that was, and you would have went a little further down, but that is okay. Look, that is when your divergence finished playing out. And hey, I'm just saying that would have been very valid for anybody to do so, but most of the crowd was saying that we're gonna fall off a cliff, even though it just didn't make sense. Like, why would everyone flip their money short from being down there? All right, when in reality, a bear market is supposed to cause the most pain. So why wouldn't they draw out the process and just exhaust the crap out of both sides? Like, look at all this crap, and then boom, they exhausted everyone. Everyone thought this was this right here. Everybody thought this zone down here. Everybody thought it was everybody thought it was like a bear flag. Like, everybody thought it was a bear flag. I thought it was a bear flag. All right, and on Bitcoin, it did stay as a bear flag. It did not explode to the upside like SPY and QQ, which is rather interesting. All right, that's pretty cool, and I think that is still very telling of what the market is going to do. I think when we break down from here, I think the market is going to start selling off. All right, but yeah, something else I also noticed on QQQ today, and I did it on SPY, which is just absolutely insane. We're gonna erase this right here. All right, which, and by the way, these lines, they only look all weird because they're drawn on the hourly chart and things do not stick on the hourly chart. But we're gonna get rid of this channel altogether, right? We're gonna get rid of that channel. We're gonna just do this, okay? So we're gonna measure this trend line breakdown just as Bulkowski tells us to do. All right, and it is here. Let's say it breaks down all the way from here. All right, you're breaking down into the zone, and once you're down here, you're going to be down at this trend line, and this is the trend line break that I want to talk about. All right, when you break that trend line, you're going way down, Buster. All right, like pretty far down. It's pretty interesting where it is going to be bringing us. All right, look at that. So this would be that trend line breaking. Okay, so if we were to fall, say we fell like today, we would come pretty close to this trend line. We would come very close to touching it, within 2% there. And guys, by the way, props to the market for, again, just behaving very irrational. Like, if from a pretty red day on QQ, I think we're down like almost 1% on the QQQ, and to be up where we are, like, this is just crazy. All right, like, this is behavior that is expected because we are in a bear market. I say it all the time, but again, it's crazy. All right, but now we have a new area right here we have to be watching, and it's right here. Now, I don't know what is going to happen when these levels are broken, but we can just kind of assume that same principles that we always talk about on the channel apply. When one support is broken, the next support is that's where it's going to be falling. So when it's broken, look for here, then look for here, then look for here. All right, and honestly, take profits accordingly. All right, if you're in shorter term contracts, yeah, money is to be made. But yeah, I think, guys, I think a big move down is coming, and it's just because the 1/3 of the money on SPX and SPY, guys, that's expiring. But look where we are. Like, we're already up here. So wouldn't it make sense for a whole month? Like, how long was this move, right? How long was this upper move? This was just about a month, guys. So we had 2 times 4, that's 8 days. So yeah, 32 days. That's 1 day over a 31-day month, right? All right, so this whole upward move took a month. What if we have a downward move that takes a month, and we come down and we make the higher high, okay, and we fill the gap? What if we reverse on the gap, actually? What if that is the case? And then from there, what if we come up here, okay? Because each like, think about it like this, okay? A lot of money in the market just goes into in the money options, and it just influences the crap out of the indices, all right? Like, that's how people in the option market are able to influence it so easy. You just buy either right in the money puts or calls, or you buy right out the money, and when they roll in the money, boom, big explosion. And then you buy a bunch of out the money calls, okay, like $1 or $2 out on the SPY or QQQ or SPX or NDQ, and then to boost the price up to those calls, then, like, say you bought 100,000 interest, big whale, all right? Then what you do is you buy $100,000, or not $100,000, 100,000 contracts of $1 in the money contracts. Boom, market makers have to hedge right away, or dealers have to hedge right away, and boom, sends it up right into the other 100,000 contract trap, and boom, you have an explosion. That's, dude, the options market has been causing all of this move. All right, people have been fucking just like what I just described is what I imagine has been happening constantly throughout this market, just to screw out the other guy. Like the people who thought it was consolidating here, well, it got here and then a bunch of sellers came in because this right here, just look at it. All right, that was your thing right there, and I guess you could have drawn one right here as another bear flag. But I mean, guys, this breakout was so obvious as well. We called this out on the channel as well, except we did it on the hourly chart. We had this trend line up for quite some time, but now there's no need to have it. But yeah, guys, let's get back to it. Okay, let's get back to it. I don't even know what I was just talking about. We can go over the economic calendar. Oh, I was talking about the expiration, I guess. Okay, and this is it's not going to be a much longer video. I'm going to cap this max. We're going to make this a 20-minute video because I do have an appointment for my hand that I got to go to. But yeah, I'm glad we just spent so much time just going over like what I believe like is most likely to happen. Okay, you guys have your own opinions. Let me know what you guys think is going to be happening in the market given the what's on the table pretty much. And we're going to be, as you see, we have the economic calendar right here, so we're going to be going over that just to see like what this week could be causing any volatility. And just keep in mind, we do have a Fed speaker coming on, and if he sounds hawkish, like just like it makes sense. We do have the monthly OPEX this Friday, so we're gonna put that on our marker, just like we used to have this on our chart. We used to have this one on a chart because I said either this was going to mark the bottom, we're gonna start reversing going into this date, or the week after this date. And look what happened the week after. Like the 5 days you made your reversal. This was your reversal, and there's your higher high for I mean the higher minor high and minor low. All right, but like major low so far has not been you haven't had a higher major low, and that's going to be put in down here. That's what that would represent. Okay, and but I do think the gap fills are going to be hit, and just realize if the gap fills don't get hit, it is indicative of, I'm glad I'm getting better with that word, it is indicative of us coming back at a not too far into the future. Think about this. Okay, we form these gaps, right? So we form the gaps all along right here. All right, I actually see one right here, which means we could actually be going lower. Okay, because gaps tend to fill. Gap downs do like 100% of the time tend to fill, so just keep that one in mind. But these gap ups we had, all right, like maybe we could, like maybe this suggests that we are going to be coming back. Like maybe we rally up, all right, and then going into 2023, maybe everything gets real bad again, all right. But I'm just saying, guys, this does look like the perfect storm to reverse off of the 200 man come down. But at the same time, we do got to talk about this, and it is the patternsite.com. Okay, and you come over here to candlesticks, okay, and we come over here to the 3 white soldiers, wherever that is. Okay, candlestick visual index, the 3 white, I think it's called 3 white soldiers. Yeah, 3 white soldiers. And I say this because we do have this, all right? So this day right here, yes, it does like kind of represent that, all right? But it was a 0% day. So, I mean, technically it did create another 3 white soldiers pattern right here. And I would say this is a more well-defined one, all right? So it does point to, I mean, if we close up here, I am making this video pretty early because I have that appointment and I gotta go into work and stuff, and I still gotta stuff with my dogs. But yeah, okay, so I mean, I don't know what's gonna happen with the end of this candle. I don't know how it's gonna form. If it closes under here, just know that we do not have a breakout from this candlestick, and I don't know. It could be signaling that hey, maybe more exhaustion. Something else I did notice was on the hourly chart of, I think it was SPY, and we can get everything out of here. All right, we can close that out. Yeah, we'll close these out as well. We all know. Just I like a clean chart. All right, people may look at my charts and say maybe it's messy, but I think it's pretty clean. All right, I think they look pretty dope. What was I about to look at though? The divergence I saw form. Not only we had one yesterday that I forgot to call out, all right, and it didn't play out today, all right. I don't know. I mean, these divergences are literally just signals. They're just telling you, hey, momentum is running out. But at the same time, this market is controlled by dealers, Okay, so momentum is only running out when people are like running out of funds to short and then get squeezed. All right, so this tells me the fact that the CCI is not forming another divergence here, a bearish divergence, and it is going up like this. It's telling me, hey, people are they're going ahead and throwing more money into the options market, and we can look at this. Okay, come over here. Let's see what's happening today. All right, let's see. And it would be puts. Okay, how many people are buying puts? Is there a lot of volume on these things? Actually, surprisingly, there's not. So, I mean, I don't know. Okay, I really don't know. But keep in mind, this does go off SPX, so you got to take that into account. NASDAQ with QQQ. But yeah, I mean, actually, yeah, there's a lot more puts being bought than calls now that I look at this. Look at this, guys. Oh, that's open interest. That is open interest. Where's the volume? There is no volume here. You got to figure out how to get that back. Here. It's here. Volume. All right, so volume, puts. Holy sweet baby Jesus! No wonder we're going up, guys. And they're buying. All right, so these guys are getting squeezed right here. They got squeezed, okay. And then these guys are doing the squeezing of those guys. All right, like this is just bad, okay. Like this is a lot of. I'm just saying this is a lot of buying pressure. Look at these calls that are in the money. If these close in the money, guys, tomorrow, like you're screwed. Like, I mean, I'm just saying that's going to be a lot of buying pressure, but it also could create, going into next week, it could create one hell of a topping tail, which could be pretty cool. All right. Or next week, maybe you get a weekly topping tail and then you come back down. All right. I'm not sure. Okay. But look at what your stochastic is doing. Look at where your CCI is doing. This is on Webull. This is on the weekly time frame. All right. And you also do have a pretty bullish, weekly, picture here, okay. But just keep in mind, okay, if you come down tomorrow, all right, or not tomorrow, just before Friday, if you come down before Friday and you close under 427.42, okay, or not, it's just let's just say under 427, all right, under 427, then you have a bearish harami on the weekly time frame, and that suggests that we're going to be moving down after that with your oscillators curving down. Okay, curving down towards your sell signal on the weekly time frame. And once these cross and give you that sell signal, like look what happened on this buy, all right? When your weekly time frame gave you the buy right here, all you had to do, so we can mark this now, and let's look at, let's come over here. So let's look at vertical line, go like that. All right, and then we're going to go on the daily time frame. And then we're going to look at when our divergence finished playing out on that time frame. And that was right here. Okay, and notice why I use the CCI and not just the RSI to find these divergences. The CCI represents it a lot better, and the Community Commodity Index, I believe that's what the CCI stands for. What that represents is the average of all prices, if I understand it completely correct. Okay, so go do your own due diligence. Go look up the definition of this oscillator, the CCI. But I do believe it represents just all history going back. That amount of buying pressure, what is it doing to the CCI? Okay, compared to what is it doing now on the chart? What is it making the chart do, that amount of buying pressure? And then what is that amount of buying pressure doing to the actual, like, what is the buying pressure? Okay, so if the buying pressure is easing up, you're going to start seeing the divergences. Okay, that's when you're going to see something like this, clear as day. You got this diverger right here. You're going straight up here. But, you know, okay, the CCI is telling you that historically, when there has been this amount of, like, this action going on, this bullish to bearish pressure, no, you would be coming down on the, on here. So you should have came down here. You should have double topped here. All right, it should be moving like this. But so this is just like directly showing you that, hey, the dealers really do control this shit. That's what they do. That's why it doesn't move just how the CCI moves. All right, if I'm understanding it correctly. All right, but again, do your own due diligence. I could be completely wrong, and I could, I don't believe I'm speaking out my ass, because I was, I mean, I looked this up when Sebastian introduced this to me, and Sebastian has also explained this to me. So yeah. But yeah, do your own due diligence. But yeah, I mean, we have another clear as day divergence that is formed here on the daily CCI as of yesterday. I think I called that out yesterday. Actually, no, I didn't call it out yesterday because it didn't turn down. Today was the day it turned down. So today is the day that that bearish divergence has formed on the daily time frame on SPY. Okay, and we can look at the CCI here. Look how it hasn't happened here. All right, that's why we use Webull and we use TradingView. But I do like TradingView charts. I don't like Webull. As you see, you can't make trend lines. You can't draw on the Webull oscillators. I just don't like the overall platform too much on Webull. All right. But yeah, now let's quickly go over the VIX very quickly. All right. So you're going down, right? You're going down. And if you touch the bottom of this trend line tomorrow, right, you're going to be in the bottom of this demand zone. That is your support. Okay. If you break this support, which is right here, this yellow line right here, if you break this yellow line, green, that's not a gap fill. Okay. But yeah, if you break this yellow line, which is your, or this blue line, which is your support, which is the right where the bottom of this demand zone is, and where the wedge would put you if you bounce off the bottom, you're going to be coming down to 18, just about 1840. Okay, 1840, 1850. But yeah, you're wanting to. I mean, look, guys, you're probably going to bounce here. Maybe your CCI bounces again. It comes down. It bounces again, and again, it gives you the buy signal. All right, like. That's probably what is going to be happening. And one of these days, it's going to pop out. And I do believe it's going to pop out and it's going to match up with the QQ and SPY. Look, SPY is very close right now to hitting its 200 MA. Okay, we could just easily come here. How close did it get right there? 11%. Okay, so expect bearish pressure to pop up at the 200 MA on SPY. And then if it breaks there on QQQ, okay, that is more, honestly, what's more likely to me is that QQ does that. And that would, like, say we have a monster move tomorrow, and this is a hammer candle, okay, or a hangman, which both have theoretical and, or not theoretical, but tested performances on the patternsight.com that are bullish, okay, bullish continuation. But yeah, you're only 2.57% away. Who says you don't have that day tomorrow or the day after that? And then VIX gets a chance to come down and touch the bottom of this trend line of the bottom of the wedge, which aligns with this support, which is the bottom of the demand zone. Okay, so I'm just saying, okay, this is why the big picture view exists. This is why we have to look at everything, not just one of them. And look what Bitcoin is doing. It is at the bottom here. But who says now that Bitcoin has touched the bottom of here? Who said it doesn't have a partial rise and then a break? So a partial rise is bearish. It's when you come down and you're in a pattern. Okay, so you're in a pattern. So let's say you're in a wedge here, okay? And you're going here, there, da-na-na, na-na-na, and you're going here. Instead of breaking down right here, you partially rise. And now you're like halfway to the top. So it's a partial rise, all right? It's not all the way to the top. And because you turn down here, instead of going up here, it is going to be so much more powerful when you break this. That partial rise is bearish. It is indicative of a bearish breakout of a pattern, all right? Or you get a partial decline and it's a bullish signal. And it's indicative of a bullish breakout from a pattern. All right. But yeah, I do believe you are, I mean, as of today, you're getting the sell signal on the CCI on TradingView, and you had your cross as of yesterday on the stochastic on Bitcoin. And look at this, okay? If you break Bitcoin's trend line, okay? If you break this, I did this earlier. All right, if you break this, you come right down to just about that target right there, okay? And if you break that, you're most likely going to come down here, and then you're in this zone, okay? And once you break this, you are probably going to have another one of these, but it's probably going to be something like this anyway. It's probably going to do that, and then we could put that there. Let's say we break out tomorrow, and then we're coming down, okay? That is most likely going to be the case. It's going to be violent, just like these all have. Violent, this whole thing right here, violent. Look at, you just did not stop for days and days and days. That's 76 bars right there of straight trading. Almost 3 months, 2.5 months of straight trading is straight red. 50% loss right there. That is what can happen. This within, how many bars is this? Within this, you lost 26% in 4 bars. Okay, and then you lost 40% in 10 bars. That's just over a week. I think you're going to have a similar scenario on your hands here, and I think it's going to be it's going to be just about a month, because I do believe the next monthly OPEX, September OPEX, is going to be, it's going to mark the reversal. It's going to mark that higher high, and it's because, again, the big money is going to, they rolled over their August to September. That's what they're going to be doing this week and next week, which is why I think we're going to be reversing. And then they're going to make that money on the downside, and then they're going to flip it for the next month when they roll over. And I think that is why we're going to mark the downside. And hey, it still makes sense that, hey, we're going to come up and touch this. It makes perfect sense to me, and we are just about almost there, guys. We are so close to touching that thing. So close to touching on SPY. All right. Beyond VIX, when you come up and break this 200 MA on the weekly chart, which is what I am watching when we break out from the wedge, I am expecting you to go boom, boom. Look, you have not had a sustained breakout over the 200 MA, where over here, yeah, this is where you went boom, boom. And if you come up here and flip the 200 MA, we're going to be watching that for another re-entry on the VIX. Once we're going to sell at our price target. Okay, but if we come back down here, once we flip over the 200 MA and it does something like this, the 200 MA is like that. Well, who says it doesn't come right back up here and form a double top, just like it did back here? Okay, like it did over here. Okay, except right here it wasn't really playable. I would say right here is what was playable. Look at this retest right here. We flipped it. All right, so this is going to be a valid rebuy. Okay, with a tight stop. All right, but yeah, guys, that is the video. I do believe we are going to still be turning down. I believe it's going to be the OPEX. Actually, that's not the video. We didn't look at the economic calendar. That's something we're taking a look at right now, okay? So today we have pretty much nothing. We have the industrial production index, but that already came out. And I'm pretty sure that was bearish for the market, but overall the market has recovered. Or it was bullish. Yeah, I'm judging by the action, it does look like it was bearish. But tomorrow, which is going to be big, is retail sales. We got to see how these are doing. All right, if they're up, like, all right, so I actually expect this to be a bearish catalyst either way, because think about it like this: if retail sales are up, more money. Okay, like I'm pretty sure credit card debt is just at its highest that it's been since the pandemic. Okay, since like COVID 2020. Which hints that people are running out of money, they can't keep up. Okay, so if we see retail sales up, but that credit card number, whenever that comes out, that is also up, that's going to be a bad sign. All right, that just means, hey, people are still running out of money. Eventually prices have to come down, deflation, and if prices are coming down, that means less profits for companies. SPY should be coming down, NASDAQ should coming down, and maybe that's when this gap way back here gets filled. I don't know. Okay, but I do think it's likely that we have a monster rally and then do that. All right, but yeah, just looking at this, we have that, and then we have business inventories. This is going to be important. Okay, I want to see like, we're not going to see specifics, but we also do have Walmart and Target. Okay, they could tank the market, guys. I do believe that's happening this week. All right, if not today. But again, I'm not sure. Okay, I've been paying attention to the market, but it's pretty much just this video, and then I just watch the charts throughout the day and just what's happened, you know. I'm still on top of everything, but it's all just in a consolidated time frame, so I have my time to myself. But yeah, real retail sales, I don't actually know what that means. But yeah, business inventories, that is an important one. So we're gonna have an important day tomorrow, because we also have this happening, which I was saying, like, if that is a hawkish speaker, that's gonna be bearish on the market. Okay, if they're saying the Fed is not doing their job to tame inflation, which I agree with, they got to hike way up to bring it down. Okay, it's at 8.7% year over year. To actually bring stuff way down to their goal by 2023, you gotta bring it way down, dude, way down. All right. But at the same time, well, actually, no, because we talked about this on the channel, and like, inflation never can go. I mean, there is going to be a deflationary period, and I'm excited for that, because the stock market should cool off during that time frame. But yeah. All right, so Thursday we have the jobless claims. That's going to be an important one. So Wednesday, tomorrow, and Thursday are very important. We have existing home sales. We have, I guess this is actually kind of important, but not too much to me, at least. And I think yeah. All right, so for that, we are chilling. Okay, we're chilling for this week. Wednesday and Thursday, it is going to be important. Watch the speaker. I'm going to be watching that speaker live, or whoever is speaking. And then you want to be paying attention to that retail sales data, as well as, what do we have on Thursday? The jobless claims. That is going to be important. All right, but yeah, guys, I will catch you guys in the next video. Peace.